The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, let's take a broad look at what we're seeing in the grain markets here at home and around the world. We've obviously had a slew of numbers from the USDA with the grain stocks at acreage updates. We're watching trade and all those headlines in the markets and more. And of course, watching weather in the growing season here in the U.S., a big South American crop getting harvested right now. Where do we go from here, kind of this midsummer and looking into the second half of the year? Let's talk about it. Tanner Emke, lead economist, grains and oilseeds for CoBank, joins us. Tanner, it is always good to hear from you, my friend. How are you?
Wonderful, Jesse. Thanks for having me back.
Absolutely. And let's just start, and I'll throw this broadly to you, Tanner. We've been watching all of these headlines and weather derivatives and so much more in these markets. And for the most part, by and large, grains have kind of been in the doldrums, so to speak. Farmers haven't loved the price. We've had some rallies here and there. What's your assessment broadly of the grain complex here as we work into mid-July?
Well, Jesse, as you've noted many times on your show, there's a lot of things the markets are trying to price in right now, and none of them are really that good. First of all, in terms of prices at any rate, the weather in the U.S. is, first of all, very benign, which is great news for yields for the most part. Now we got some heat and some dryness in some spots. Out in Kansas, where I was just here recently for wheat harvest with my family's farm in western Kansas, the turn to hot and dry weather was welcomed in the respect that the combines need dry weather to move through the field. But there was some downside there in terms of quality of the wheat. There had been some rains out there. And so the markets are kind of pricing things like that in. But yields are phenomenal. So just starting right there on wheat, the yields coming in off the combines this year, for the most part, are absolutely phenomenal. There's a lot of fields out there that are 80, 90, 100 bushel wheat. Those are the kinds of yields that farmers hope for. Obviously, that's going to be that's going to put downward pressure on price, more supply. Then on corn and soybeans, same thing there again, for the most part, although there have been some areas, especially in the eastern corn belt, like Ohio, for instance, some late planting there, some issues with some excessive moisture. For the most part, though, benign conditions. You can't really rally a market when you've got prospects for record yields this year for corn and soybeans, especially on expanded acreage that we have for corn. So right there off the bat for corn, wheat, and soybeans, the yields that we're seeing for wheat and the yield potential for corn and beans is just really nothing to write home about in terms of market concern. Then you turn to the export situation or the demand situation. Exports have been very strong. That's been priced into the market with Mexico just buying so much corn. Soybeans, believe it or not, old crop exports have been strong. Again, a lot of exports to Mexico and to some other smaller markets like Egypt, with the Chinese not buying as much. But net, we've had a stronger export pace for soybeans, but this is in the backdrop of enhanced supply. So you got to turn the focus now to new crop, where we have new crop sales. And now we're seeing some data that's been concerning now for a while. Export sales are nothing to write home about there for soybeans, especially with China really being very cautious and very reluctant to buy. That they will have to come buy it from the United States at some point during that export window that closes for Brazil. They're going to have to buy from the United States. The question is how much, and right now they are in a position where they don't have to buy as much from the United States. So the market is pricing that in. Wheat export sales have been strong. We still need to see those numbers revealed in enhanced shipping pace, but the sales are strong. And the same is also with corn. But again, this is in the backdrop of enhanced supply here in the United States. Mm-hmm. So how are we doing globally in terms of our competition with other exporters? Well, there again, it's hard to find a really bullish story there, Jesse, especially we'll start with wheat. The Europeans are harvesting or will be harvesting a much bigger crop. Last year was a terrible crop for the Europeans. They had relentless rains, terrible growing conditions, terrible growing season, terrible planting season. It was just a difficult situation there for the Europeans, and that's changed. They have a much bigger crop this year. The Russians have a slightly bigger crop. Now, it's not the crop that they've had in the prior years, where it was over 90 million tons. That was a lot of wheat. And this time around, we're looking at 83 to 84, which is still an improvement over last year, but it's still relatively tight. But with that slightly bigger crop, they're going to be able to push more wheat out at the beginning of the growing season. Or at the beginning of the export season. And so that's weighing on wheat prices as well. And of course, we got to talk about Canada, just north of the border here. The Canadians have no shortfall in supply this year either. So globally, we've got a lot of competition on wheat. Now you turn to corn and soybeans. There again, Jesse, we've got a lot of competition from South America, specifically Brazil. Record soybean crop there last year. They're still exporting that. Like I said, however, that export window is going to be closing. There will be an opportunity for us to fill in that void. And then a record large safrinha corn crop. So really, it's an issue here where the market just can't find a bullish story on the supply side. On the demand side, there's some hope there. We just had the stocks report come out here in the U.S. last week, and that showed very healthy usage pace, especially for corn and soybeans. And the market is doing its job with low prices. The exports for old crop, as I said earlier, have been strong, particularly for corn. Usage has been strong in the U.S. with especially on the biofuel side of things. That's been very positive. We did have a hiccup there for a little bit as the market was trying to price in the uncertainty of demand because of our lack of guidance on 45Z. We have now got past that uncertain point of demand or of guidance on 45Z carbon credit or tax credit. That's going to be a big positive here going forward. But really, again, how much more capacity are we going to bring online? How much new capacity? That's there's a hopeful sign here that we can now finally start to see some of these old expansions or new greenfield facilities that had been shelved in the past might come back now. But there again, that's a whole other discussion of borrowing costs, of labor, of input costs. But now we've got certainty there. We have a more optimistic viewpoint on demand going forward, especially for soybeans. So really here, Jesse, there's hope. With now we got some better guidance on biofuel policy, but we're still swimming a lot of commodities globally. And that has been a very strong headwind. It will continue to be a strong headwind for the U.S. Hopefully here with a weakening U.S. dollar, though, that will give us a tailwind and buy us a little bit more export market.
Anything surprise you in terms of the acreage estimates we saw at the end of June? It felt like the markets were surprised that there weren't many changes at all. Your thoughts on what we saw in those estimates from USDA, Tanner?
I think you said it best there. The surprise, Jesse, was that there was none. Typically, these reports bring fireworks. We always have our estimates about what the USDA is going to be doing. And then USDA throws a curveball somehow on wheat, corn, or soybean acreage. And this time, the differences between the March prospective plannings report and the June acreage report were very minimal. They cut corn acreage just a touch, just 100 million acres, or excuse me, 100,000 acres, not very much at all, from 9.56, excuse me, let me get my numbers right here. 9.53 down to basically 9.53. Not much of a change there on corn. Same thing there again on soybeans and wheat. And so I think the market was a little shocked by the fact that, boy, this was really a sleeper. And so the market had to look at what happened with the stocks report. There again, not much to write home about there. So I think the story here really turns back to yield. USDA just had nothing surprising there on acreage. And so as a result, we're going back to weather. We got to trade weather markets again, which is, what we're always going to be doing this time of year. But there was nothing really for the market to write home about on this report.
We are talking with Tanner Emke, lead economist, grains and oilseeds at CoBank. Tanner, as you look at some of the price action right now across the grain complex, does it feel like, and some producers might not be happy with me saying it this way because I know they don't love the prices right now, but does it feel like these markets are somewhat pricing in or trading what the market believes is a fair value level here across the commodities with such a big global supply and more? Does it feel like the markets are kind of saying this is what we believe this price should be right now? I mean, your thoughts on that?
Well, the market has to do its job of buying demand. When we have surplus of supply, you're going to stimulate demand through low price, and that's what it's doing, and that's what we are seeing. We have seen usage tick up in the last quarter. We wish it was more. Excuse me. I had a sneeze there. We wish it was obviously a little bit more of more usage, especially on the export front. But those are the prices that we have right now are what other farmers around the world are also dealing with. If you look at cash prices in Mato Grosso, in Brazil, boy, let me tell you, if you don't like corn prices here in the United States, be glad you are not farming in Brazil right now. That is a very low price there, well below their cost of production. And their cost of production is very, very low. Their land cost is lower. Their labor cost is lower. A lot of their other inputs are lower. The machinery costs are lower. And yet they're still below break even. The prices are still above. They're not making money on any commodities right now, whether it's corn, soybeans, cotton. So a very difficult situation in that area. And that's a whole host of reasons, because they're lacking storage. And so when that record crop comes to market, what that then does is that pushes that commodity directly into the export market, and that's going to depress global prices. And we're seeing the impact of that happen right here. So I'd say, although prices are clearly not favorable across most commodities, corn, wheat, soybeans, cotton, rice, you name it, there is no commodity right now where farmers are really penciling a profit. Look around the world, and other farmers are in a worse situation because they just lack the marketing tools and the infrastructure to improve their marketing. And I think Mato Grosso is a story right there. I'll be glad you're here in the United States. We have the infrastructure, we have storage that enables more flexible marketing. Although the price options are not great, we still have a lot more flexibility with our marketing here in the U.S. compared to other countries.
Tanner, obviously, we always remember that risk of trading futures and options can be substantial. Producers, from their perspective, they're going through the growing season in the U.S. They don't love a lot of this price action. They're waiting to see what happens if the market can, find its way to buy some demand, things like that, et cetera, et cetera. What would you leave producers with here as they move forward? Take a look at their balance sheets. We know the ag economy struggling, bit of that cost price squeeze going on. So by and large, what would you leave folks with as they're looking at their books, their marketing plan, the operation, et cetera? What's a good reminder for them here right now?
Well, just like any farmer who's been through these periods before, the name of the game is to sharpen your pencil, and you got to be very cost sensitive. Obviously, that's been a story that's been told a lot about how costs of production have not come down commensurate with what's going on in the commodity markets. You have to get innovative with your marketing. You start looking at storage hedges and what does that cost you? What is their opportunities there? When there is a carry in the futures market, the market is paying you to store. What kind of opportunities there do you have with your own on-farm storage or with your local co-op? And then, of course, in these times, you really got to strengthen your relationships with your market advisor, with your co-op, or anybody else helping you with marketing. or with your cost of production. You got to have those talks with your banker. Hopefully, you're banking with Farm Credit, but those conversations with whoever your lender is, you got to have a very close relationship on how to manage through these cycles, and it's going to come down to how well you manage all of these facets, where you're not trying to sell corn or soybeans or wheat for dollars, but for nickels on the margin, and trying to stay profitable at least above your cost of production. And that requires some innovative marketing and perhaps new value add opportunities.
Tanner, I want to give a plug as well, real quick. I know you and the whole team there at CoBank have a lot of great resources on the Knowledge Exchange at cobank.com. I know periodically you guys have a lot of great research studies and articles and much more that you guys share with folks that they can take a look at to get some ideas for their operation. Right, Tanner?
Yes, please visit our website, cobank.com, and you can go to Knowledge Exchange. That's our research division at CoBank. We produce research for all of our customers and for anyone out there who needs to sharpen their skills or knowledge about what's going on in the ag economy. Please go to our website and check that out. We also have a newsletter, Gleanings, that we send out every Monday. You can find me on online, and let me know if you want to sign up for that.
And I know that newsletter, I subscribe to it, packed full of a ton of information every Monday. Always appreciate the time. Go to cobank.com for more. Lead economist, grains and oilseeds for CoBank, Tanner Emke. Thanks for joining us on the show. Have a good one. We'll talk to you again soon, Tanner.
Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.